Hello folks, welcome to another market internal review. We're going to go ahead and review the week of February 12th, 2024, all the way up to the Friday 16th. So heading off this week, this past week, we went into a couple of different news events. We had a handful of Fed speeches, we had PPI, core PPI, we had a couple of different auctions and bonds. So overall, quite a heavy week when it comes to data and news releases. You can see if I go all the way back to Monday, we started in pretty hot. So monthly budgets, bill auctions, all the data that I saw for the most part, save for core inflation, mostly flat. PPI had a couple different ticks. I mean, none of it's really that great. But the one thing that really seemed to set off the market was Monday coming over to the PPI. I believe that was the overnight event or early morning event rather, and we had a pretty good sell-off. So last video I had mentioned that I was not necessarily going to consider bearishness or anything overextended kind of nature because I'm mostly looking for the monthly TiWAP crossdowns. So Tuesday this week we did have that. We opened up underneath for the New York composite. We actually opened right over, and then we went underneath, tested it, and finished lower. So on that day specifically, I'm starting to consider perhaps we will be heading lower. Now, I don't ever usually decide in the course of one day what the broad market context might be, just because while you can always point back to a specific day and say, that was it, that was the top, that was the bottom, it's hindsight bias at best. It's going to be very difficult to tell a broad market pullback just from one day's intraday data. That's my opinion, though. But so Tuesday we finished under monthly TiWAP, and the two indices that I'm really looking for some kind of a strength bias is the Qs and SPY. SPY and Q both closed just under about 50 cents, somewhere around there. The Dow, I would say, a little bit worse. It closed under the first standard deviation low end. The Russell also, poor Russell. I was so proud Russell broke out at 200, this monthly gap, and just plummeted off of that news and finished under, just like Dow, under monthly TiWAP. But then the very next day, you notice we're right back over, and right around that 12 o'clock time on the 2-minute chart anyways, we have a nice little bounce right on monthly TiWAP here. We flirted around with previous session high and actually have a nice breakout of first standard deviation high on the monthly TiWAP. Look at that. And we just rip all the way forward from there. So this is kind of what I'm saying, is just because one day makes a pullback does not mean that the bears are out, shorts are winning, and it's time to YOLO puts. Just not how it works. And so that's why the last video I mentioned, I will look at monthly TiWAP to somewhat guide my bias there on the broader time frame. So from the SPY 2-minute chart, using the previous session TiWAP ranges indicator, I believe I've shown this before, but I'll show it again. This is how I have mine set up. It is anchored to the session, and if I can find it, locked to RTH data only. Market Internals only has regular trading hour data, so it really doesn't make sense from my perspective and from all my backtesting to not have this option enabled. But the very first version of TiWAP, I did not have this, so to preserve the original Functionality, though no one has asked me to do so, I have left this as a toggleable, is that a word, option that everybody can just set for themselves. It's always checked on mine. And then I have the 50% between the whole deviation. Those are the levels I turn on, and I have all the main deviations, 1, 2, and 3, colors. So, all right. If you watched the last video, you'll notice that I made mention that if we are over the first deviation from prior day, that is a long kind of day. Focus on long trades. You could use the intraday TiWAP on the current session that is building out all of its data as your pullback bias detection filter, whatever. So here you see morning, we have some decent tick and mostly one-sided, but we are over prior first standard deviation range. So it's time to look for long setups. So pullbacks, tick pullbacks, SPY pullbacks, whatever, that's kind of what you're looking for. And we had a nice big rip, break and retest on that first standard deviation on the current session. And I'm sure this was 2 deviations delivered. You could have made your day on that and been done for the rest of the day. We had a double top. You get a nice breakdown of first standard deviation. You also get another breakdown of TiWAP. All of these levels, you can see the candlesticks just perfectly aligning to them. This is quite frequent unless it's chop. So that was a long day. Second day, Tuesday, we're under. So we focus on short setups. So because we are so far below prior first deviation, we have a reason for it. It's the futures moves. So I will still stick to my rule of underneath, I'm going to look for shorts. However, I will entertain the idea of a potential reversal, and I will use TiWAP to kind of guide me on what I'm looking for. Now we're so far under. I know this is from news, yada, yada, yada. So I'm not going to expect longs all the way back up here. I mean, it could happen, obviously. But when we look at the price of New York Composite trend and its location and sentiment, we can see bearishness. Same for the volume. Bearish volume, bearish trend. So not much reason to consider that price will be skyrocketing all the way back to prior range from this past Monday on the 12th. So what do we look for? Well, you can try to be a contrarian trader and find a TiWAP range level that looks like a nice area of resistance. You can use prior price. You can use TiWAP bands itself. We can always turn on additional deviations and look for rejection setups. Okay, my charts are already pretty noisy, pretty busy, so I do leave those off for the most part. I can kind of see them without having them on, but I mainly focus on that first standard deviation. And looking at this, there's definitely a couple setups off of this, and certainly tick confirms, all of the trend data confirms very high probable setup, and we get, I mean, quite a move. You could have waited for a break and retest, or as I call them, a BNR. You could have waited for a BNR off of this, off of TiWAP, off of the lower first band, you name it. You can pretty much use that candle pattern off of pretty much anything you have a high degree of faith in and back-tested results in that confirm that it's a high probable setup. So we're even showing here the trend is showing a nice trend move at this point. So probably strong bear side, I would imagine, if I want to go look at it. And that happens right around 1, almost 2 p.m. So a lot of this moves here lately I've noticed somewhat not aligned to my favorite times, but pretty close. We're still pretty spot on. So 12:30 was right around where we had that move back down and sold off, made a new low. When we make a new low, like right here, the morning session, that morning range is establishing some important statistical data. So a lot of the market that watches the first hour range, the first 15-minute range, these ranges are important. So when you see them break down on both sides, that's usually an indication of more volatility. That's an indication that things have squeezed quite a lot. And that new low being broken right here, that's a really great signal. We even had an engulf candle. It engulfed the last 10 minutes worth of price roughly. So that's great. Strong bounce, retest right off the band, all the way back down again. Tick confirms. Lots of extreme closures down here. So this was a pretty nice setup. Next day, what do we get? Okay, so having a gap down day, I've mentioned in the past that I expect chop the day after. So I'm going to turn off these extra bands. I don't think we need them for the rest of the time. Looking at this, we do have a chop. Usually I see it in the first standard deviation, but in this particular case, because it's that kind of week, we have overnight pre-market futures moves, and so they chop the next whole deviation zone above. The next two. So, or no, yeah, the next whole deviation above. So we chop within that pretty much the whole day, and I am long focused. So you use the data to determine where a deal is. So where could we say the low might be? Looking at MIT, we're seeing bullishness across the composite index. We have a couple of strong pullbacks here. So here's a pullback right off the first standard deviation high from prior day. We have another pullback here, first standard deviation of the current day. A couple of small ones here, but I like to see them break down a little bit more than that. So around this 800,000 area, that's where this area here on MIT indicates a really strong move by the New York market. So, and it is the brightest, so you can kind of see all around here. It's supposed to catch your eye. So right here, that was a good long setup. Okay. And notice what the top holdings has been doing. So Monday, top holdings was bearish, but SPY was moving up. I believe Qs was also moving up. Then we get this massive sell-off overnight, extended pre-market, and then top holdings is really bearish. Top holdings Wednesday, bullish, but mixed. If you look at the rest of this time here in noon session, the lunch slump, and we finally do see a nice supporting bias from the top holdings of SPX and the NASDAQ, the NDX. So pullback here. We had some heat here on the bullish side for top holdings. Pullback, buy, rip, everything supporting. So that was a good one. No need to short. You could, but no need to short. Wait for the setup. Wait for the longs. Let the rules, let the filters, let the data support your direction, your directional bias. Okay, another thing to notice, we had an incredibly minuscule weekly gap. I actually thought this was a indicator anomaly this week. I didn't know what this was at first because I don't know that I've ever seen one that small. I've seen daily gaps that small, but not weekly. So that's literally a 3-cent weekly gap range. It did have moves though. So Thursday, the 15th, we have more of a bullish move here. So top holdings, interestingly enough, is not bullish. It's majority decline here by -60%. For NASDAQ, SPY, S&P was only about 10%, it looks like. So 20%, sorry. Anyways, we come in and we're over prior day high for SPY. So that's a good bullish signal. And we had a gap here of what looks to be about 40 cents, 50 cents, somewhere around there. We want to wait and see if that's tested. I'm quite sure the mid of that gap is probably what was tested. It almost always happens. Yep, there you go, 50%. And we had a nice hot batch of one-sided tick here. This average closure plot, that white line, smooth white line, it's tracking the last 8 closes of tick. When you see that in the extreme, either high or low, definitely a great time to sit on your hands. Even if you are thinking, oh, I'll invert that, that's not always the case. Sometimes it continues to pump. But when it does finally stop, you don't want to be on the wrong side. It'll be violent for the retracement. So this morning, look at the struggle here in price. Very hazy wicks everywhere. Very tight range overall as well. If I'm not mistaken, we've had a couple of days where the orb, the first 15 minutes and the first hour ranges are nearly overlapping each other. Lots of squeeze, lots of tight moves, and then lots of an influx of volatility from, I'm assuming, Fed speakers or something else. There was also a news pop this week. I can't even remember what it was. It was over so fast, I didn't commit it to memory. But this day here, so 50% of the daily gap, prior day high, boom, we bounce right on up. Okay, we don't come back. Another key thing to watch with price action is higher lows. So we continually kept creating those. Here we had lower lows, just barely, but we did. And then we completely reverse. So I know some people will probably see a Head and Shoulders candle pattern there. So we get that set up and not really strong tick pullbacks. So if you're waiting for a tick pullback, this might have been a day where you missed, quote unquote, missed a trade. But given how choppy all this is, options would be tough. So, and I think some of that is indicative of what the top holdings are doing. There's a lot of struggle there. All right, so that leads us into Friday. Friday was really volatile. We had breaks on both sides of the first standard deviation range. So when we open inside, that's a chop signal. Sit on your hands and wait. Don't chase these breaks. Okay, don't try to call reversals. And chasing these breaks, like this one we broke down, we come back in, close back below. That could be a good signal. However, we're inside the first standard deviation range on the current session. So that's somewhat chop area, and it's dynamic, but it is. And we're also at mid of range. So right here, I think could be a candidate for a short. The only thing I really don't like about it is the trends for composite price and volume are actually bullish at this moment. And we're also already breaking tick low. We're breaking 500 negative. So that's kind of a sus, as the kids say, sus entry here for shorts. I do not like shorting with tick. I have to see some insane repeated tick closures, lows, you name it. I want to see like complete catastrophe for me to jump in on tick breaks. Trend is also not signaling here, and we have these crazy tall wicks here. So this here is a good sign that maybe buyers are stepping in, especially that it wicked prior day low price. So prior day low, we get a wick that's just as long as the whole candle body. Then we get this insanely tall candle here for a buy, sends us right back into previous TiWAP range. We halt right on TiWAP and prior day midpoint, and then wick around here. So that coupled with the tick and the crazy inverted trends on New York, that's a pretty good signal to just wait. You might miss it, or you might miss out on being chopped to death. So that's a choice you have to make. You do have top holdings showing incredibly bearish things. So, I wouldn't fault anybody for trying to short that. It's not low a day. It's not high a day, but it is below the prior TWAP and a couple of other things. So I definitely like to try shorts only under prior day mid, only under prior TWAP, outside of this range typically. But I want to see a nice smooth arc through this whole range. I don't want to see like a quick rip through. Those are usually quickly reverted because if you consider the fact that somebody was probably surprised, or there's a huge bucket of orders, be it stops or limit fills, those are all going to be causing this kind of movement. Something happened, there's an influx of orders. You'll see the level 2 and the DOM start to show some crazy bid ask kind of sizing, and order speed will increase. So that's usually what's going on when you see this kind of movement here. One thing that could give you pause also for doing any kind of shorting is we have a tick divergence. So tick here, mostly flat, price coming down. So lots of clues here on maybe waiting. So we chop with inside of this first standard deviation range most of the day. We have little breaks here, little breaks below. Nothing really that great. These break and retests off of this, tempting, especially in favor of the trend. Top holdings kind of curling up, but overall, this is a scalper's kind of setup day, and it's just rough. I think I got chopped up on a couple trades in this day, and inside days just suck, honestly. that's a big takeaway. If you go and look at your charts, you can use my PDR indicator, which I actually need to push an update out for, but looking at any day where we're inside prior range from 9:30 to 4 p.m. Eastern, any day we have an inside day, it's awful. Unless it's a really wide range, abnormally so for whatever it is you're trading, it's usually not great trading. So if you're scalping futures, you can probably do very well. I know some people that do, but for options traders, somebody that needs kind of a sustained trend move, you're not really going to get that inside of a prior day range, because everybody's basically decided that the price of whatever it is fair. All right, so that pretty much concludes the price analysis of the week. Looking at Vold for this past week, you can see, so here's Monday, so here's Tuesday, right? So here's Tuesday, massive gap down, tons of bear volume on the New York Composite. But then look, next day, right back up. So that's where I say just be careful how you create your bias. So Friday is a little telling. So Friday we had more flat, but then we definitely ended bearish. So, what could be occurring is we had our breakdown. We're coming back up one more time to come lower. Looking at market breadth, though, which I had this chart up just a little bit ago, we did not make all-time new highs, but we did come really close on Friday to starting to head to that area. The indicator down here for top holdings of the major indices, we were at that 20%. Recall I said anytime we're there, that's kind of a buy. So look at Tuesday. Tuesday, we dipped below the 10 SMA. I believe, if I move this out of my way, yeah, we almost wicked the 20 SMA daily. Then we had those back-to-back buy days. So that was a really great signal. Looking at this every time, it almost happens every stinking time with these. So it's a great signal. And interestingly, the RSIs did come up a little bit, but nothing really hot. And I'm still kind of seeing the 200s and the 50s are somewhat in a decline. this data is going to be very hard for you to tell overall. You'd have to start reviewing actual top holdings of all these to see, but if you can look at it, you can see that it is on the decline. So is the Nasdaq. I mean, they're all on the decline. Russell, I'm not surprised in, but the other ones, they are all in decline slowly over time as SPY is rising. So go over to the ad. So that was Tuesday. No, should be no surprise there. Look at that 200 complete V, hilarious. And then here's Friday. So Friday we come up, we try to hit complete neutrality on the advanced decline. We reject, and we start heading back down. The VIX. VIX has been rising with SPY. Of course, this is VIX one day. It can kind of do that. That's not necessarily out of the norm. We go look at VIX, true VIX, and 2-minute chart here. All right, so here's a sell-off. We hit a peak of almost 18. All the option sellers loving that, trying to sell a bunch of stuff. And then literally the next day we dropped $4, well, by 4. So back to 14s, and that's kind of where we settled. So the options market, the volatility is not really a believer in downside. So that's another indication that perhaps we're not really heading lower. So heading into this upcoming week, I know last time I mentioned NVIDIA earnings. I really did think it was this last week, but it's not. It might be this week. You can look it up for yourself. But that's going to be on the agenda. Let's see, what else do we have here? We got bill auctions, more Fed speakers. Oh, okay. So 21st, we have FOMC minutes. So that'll be huge. And that's also off of a short week. So that's what, Wednesday? So Wednesday we have FOMC minutes. I would definitely expect chop this week until that occurs. So tomorrow's probably going to be awful for anybody that's trying to trade intraday. We had a holiday today when I'm filming this Monday, if I didn't say. S&P, PMI, that can definitely have impact. All right, well, definitely some things. So I'm going to expect more chop, depending on what the Fed speakers say. They could pump or they could dump. Barkin came out Tuesday. I can't remember what day he came out, and the market definitely pumped off of whatever the heck he was saying. So overall, I'm going to continue to use the intraday data to determine my bias. And given that all the indices closed, New York Composite definitely closed way over monthly TiWAP. The SPY and Qs basically closed right on it, if I'm not mistaken. Oh, okay, no, I take it back. They closed above it. Yep. Qs closed, nearly on it. The Dow decently above. Russell, same thing. So mainly it comes down to Qs, I think. I think tech will be, no surprise, will be the one to kind of lead the dump or the pump. So it's very, very close. So 429, 429.8, you call it 499, or 499, 430. Call it 430. Doesn't have to be exact. But you can see this monthly TWAP level is very accurate. This one here, Wednesday on the 14th, to the wick, bounce that sucker. Very good stuff. SPY doing pretty decent. So we had a couple different signals off monthly TWAP over this past week. Another wick perfectly right off of that, and we had a weekly gap down there from a couple weeks back. So, but you can see we're still in bull territory when it comes to monthly TWAP and what I use anyways. I would say tech is going to give us a good signal. I'm really surprised with Russell. Just the fact that it yeeted all the way back to this monthly gap, and then we broke right over it, overnight gap up, and pretty much held it. So back up to almost 202s. All right, folks, that pretty much concludes it. I'm just going to keep watching the market breadth, watching the intraday data, watching the internals, and doing my thing. So hope you enjoyed this content. I do have a couple other videos coming out. I've been seeing a lot of comments. I got more subscribers since I've been publishing less videos. So I appreciate anybody that's recently subscribed. I hope you're finding something out of my rambling. And feel free to leave a comment at any time. Ask away. I have very limited time, but I'll do my best. And yeah, that's it. Have a great week. Hope you had a great weekend. And as always, thanks for watching. Happy trading.